One of the most common questions I get is, how do I know if I have to make estimated tax payments? And if I do, how do I know how much to pay? This is a question I get from my clients, so I want to make a video for their benefit and also for yours. I'm going to provide you a simple, no-nonsense explanation of what to do when it comes to estimated taxes. So let's dive in. So let's go for practicality here. I just want you to go to Google when you have this question, because you might not remember everything I talked to you about, and just type in TurboTax estimated taxes, because they have pretty reliable articles, and it's just going to be this first article that you see, and you're going to scroll down and you're going to see that there are 3 rules that are going to help you determine whether or not you need to make estimated tax payments. So to determine whether you need to make quarterly estimated tax payments, answer these questions. So the main question is, are you going to owe over $1,000 in taxes for the year? If the answer to that question is yes, then you might have to make estimated tax payments. If it's no, then you don't have to worry about it. So let's assume you are going to make over $1,000. You can then move to the next questions. And those are basically exceptions to that rule. Their number 3 I would have put as number 2 because I like it better. And that is, have you already paid or will you pay an amount equal to your prior year's tax liability? Basically, that means if you've already paid in an amount greater than what you paid last year in total for taxes, then you don't have to make any further estimated tax payments. You're off the hook. That doesn't mean that you won't owe any additional tax at the end of the year. It just means you don't have to pay any more throughout the year. It means that you won't be penalized. You won't be subject to any late penalties or interest if you don't make any further payments. And the last rule is, if you've already paid an amount equal to or greater than 90% of your current year tax liability, then you don't have to make any further payments. The reason that this one is not as good is because you don't know exactly what your tax liability is going to be for this year. It's going to be an estimate. It's going to be based on a projection. So let's go with the second rule I talked about. How do you determine what your prior year tax liability was? So here's an example tax return. So I would go into my individual tax return from last year, whatever that year was, go to the second page of your main 1040 form and scroll down to where it says your total tax. So $10,394 was the total tax liability for the year. You paid $290 of that through your W-2. You paid another $7,600 through estimated payments, apparently. But your overall tax that you paid throughout the year was still this $10,394. And the remainder of what you didn't pay for the year, you paid down here, this $225.04. That's what you owed at the end of the year. But again, your total tax liability was this $10,394. Now, if you had any additional child tax credit or American Opportunity Credit or Earned Income Credit taken out of that, you would subtract that out of this tax liability because that's something that reduced your actual tax. So all you'd need to do to determine your estimated tax payments for the current year would be to divide that number by 4, and it's basically $2,600, so you'll pay that quarterly in the current year, and that'll allow you to avoid any late penalties or interest if you're short of your total tax liability for the current year. But then say you want to base your estimated taxes on the current year, so you have to follow that 90% rule. You have to make sure that you pay in 90% of the tax that's owed for the year over the course of the year. So I just like using a simple calculator. I'll link this below. But basically, let's say that you are married. Your filing is married filing jointly. Let's say you have 2 dependents who qualify for the child tax credit. So for that, your kids have to be younger than 17 years old. Let's say you got 2 kids. Let's say that you're John and Jane. So John makes $85,000 W-2 salary. And then let's say that Jane is a reseller. Let's say that she profits $55,000. So you would enter that in this other sources section. You'd scroll down to this Schedule C section because that's where your business income goes. And this is your profit after you take out all expenses. So you have to have a projection for that. Let's say $55,000. Keep scrolling down. So your total income is $140,000. That's calculated here. You're allowed to deduct a half of your self-employment tax, which we haven't seen calculated yet, but it is being calculated. So it's automatically deducting this. And let's just say you take the standard deduction, because that's what most people take these days. And it goes up every year. It's nearly $30,000 now for married filing jointly. So that gets your taxable income down to $108,414. And your income tax, just based on your regular income tax brackets, which you can see below if you scroll down, is this $14,466. And then from that, you get to subtract the child tax credit. So that's $4,000 off. but then you have to add your self-employment tax. So your self-employment tax is basically 15% of your business income. So 15% of that 55,000. So you're down to about 10,466, and then you have to add your self-employment tax, which is this 7,771. So that gets your total tax up to 18,237. And then on this last tab, you have to figure in any taxes that are being withheld through a W-2 paycheck. So let's say that John is having withheld about 200 per month. So 200 times 12, that's 2,400. You would put 2,400 in this tax withheld section. If you've made any estimated tax payments already, you could factor those in here. And then you can hit calculate, but it should calculate on its own. I'm just going to collapse these so we can see the totals. So your outstanding tax bill is estimated at $15,837. So remember, that's your $18,237 tax liability minus what you've already paid in through your W-2 paycheck or what you project to pay in during the year. So that leaves you $15,837 for the rest of the year. So if it's the beginning of the year, you just take that $15,837, divide by 4, and about $3,800, $3,900 is about what you would pay in quarterly to make sure that you meet your estimated tax obligation. And if you just barely want to satisfy that 90% rule, you can take the tax liability of $18,237 and you can multiply the 90%, subtract out what you've already paid in, divide by 4, and then you can pay that each quarter for the rest of the year. But again, they're called estimated income tax payments for a reason. They're estimates. I don't think you should spend more than 5 to 10 minutes on this unless you just really want to drill down and be super accurate. But in my experience, I've found that if I spend an hour or two on it, I can be 99% accurate. And if I spend 5 minutes on it, I can be 90% accurate. So that additional time isn't usually very well justified. So then to make the payment, simply go to irs.gov/payments and use direct pay. There are other ways to pay, but I think this is the simplest. You just go in to make a payment. You provide some personal information to confirm your identity. You select the estimated tax for your 1040 for the current year, and you just make the payment. And then you save a record for your own personal records because that'll go on your tax return when you do file your taxes. Another way to make the payment is simply to have you or your spouse increase your withholdings on your W-2 paycheck if you or your spouse have a W-2 job. And then if you increase those enough, since it all comes out of the same bucket, then you won't have to make any additional estimated tax payments. And this is for the federal piece. A lot of states also require estimated tax payments, but they have lower rates. So you can see the link to the article and the calculator in the IRS Direct Pay down below. Let me know if you have any questions in the comments, and make sure you come join my free Accounting for Online Sellers Facebook group.